For more on the moves, Mizuho healthcare strategist Jared Holz joins us here on set. Jared, great to have you with us. It felt like the bar was sort of low when it comes to Novo and the Alzheimer's data, and yet the stock is moving this much lower. I mean, what do you need to see at this point? Is it a value trap here?
I think you just need to see some resurrection of its obesity drug in terms of revenue, right? Like, it's hard to believe we're at 4 to 5 year lows in the stock. It's almost as though they would have been better off not even having an obesity drug if they knew that the street was going to treat it this horribly, if they were second fiddle to Lilly. So that's why, and we've spoken about this before, like I've been terming it Moderna 2.0 because at the top of its success, they kind of stood still, and now, years later, they're trying to kind of, recoup and build out and with the pipeline and whatever. But I think it's just going to take a little bit of share gains on the part of Wegovy versus Zepbound and go from there. But it's been startling to see the demise of what was a couple of years ago like the darling in the sector.
Yeah.
So I'm surprised sort of at the magnitude. Certainly early this morning, the magnitude of the move was kind of shocking, that you would think, oh, this 12 and change times PE, but 12% of that was really on the hope of this drug, the Alzheimer's drug, which didn't make any sense.
Right.
How significant did you think this drug should be?
I mean, that was my take, Karen, when I saw the data this morning. I thought maybe down 5%. That's what I wrote very early on. I thought it overshot. I didn't expect this to be a super positive trial. I think those that were optimistic were looking for some pockets, maybe some patient populations within the trial to show promise. But I think investors thought the up-down on this was up 20, down 5. And so when I saw the data this morning, I'm like, okay, maybe this is a minus 5% day. It wound up being that, when all was said and done. But I don't think there was much expectation in this at all. Certainly not in the models or the valuation.
Yeah, and getting punished on an Alzheimer's EVOKE trial is not what I would have expected as a shareholder. So back to investors, it seems to me that this was, and there's been a bunch of these, a chance to really throw this one out. So let's get to investor sentiment, though, in almost everything else in your sector, which really does seem to be. But let's go with mega cap pharma, especially, and some of the biotech. Where after the moves we've seen, I mean, a Bristol breakout here, almost on the charts, looks like you have a long way to go, and you've been waiting for this.
Yeah, this has been an incredible year for large cap pharma. Really, when you back out a couple of the exceptions, J&J up 40. Lilly, obviously, it's been a gangbuster year. AbbVie trading at highs. Amgen, Gilead's been a great stock this year. So we're finally dealing with, the Mercks, the Bristols, those that have not yet gone to year-to-date highs. Bristol a little bit tricky. There's some data there that they have to kind of get through. But I thought it was encouraging today. Stock up 4% on someone else's data. Clearly, I think there's a bias to own them. I think the investor base is just trying to figure out what is going to be that driving factor that gets them to turn more positive.
So what is the story with Bristol moving higher on the back of Bayer's data? Because it had a similar mechanism, which it tested for acute coronary syndrome. But this would be for pre-stroke. And so it's a different indication. And so therefore, there's a reason that this drug may be revived after people left it sort of for dead. Yeah,
I think Bayer is working on this as well for essentially stroke prevention, these factor 11 inhibitors. Similar markets. And I think, obviously, the read-through today was if works for Bayer here, it's going to work for Bristol. We don't know that. But again, when a stock is trading below 10 times, you don't really need much.
Yeah, it's trading at 7 plus.
Yeah, well, that's what we're talking about in the overtime, the 2-3 standard deviations of multiple that Eli Lilly gets as opposed to these companies. Right. And this is my final question to you. M&A has been a thing over the last month, and is 26 going to be the year where all these $3 to $6 billion companies, there are about 5 of them out there, get gobbled up?
I think so. I mean, this has been an incredible year. I think there have been 19 deals north of $500 million in public biotech equity. That would be the second best year, not in terms of dollar. We've seen bigger dollars spent, like the Celgene year and the Seagen year. But it's been incredibly active. All the data points and anecdotal conversations suggest that next year is going to be a huge year, too. I mean, the denominator in publicly traded biotech is still hundreds of companies that are kind of up for grabs here. I've been using a list of what I call like the top 40, maybe. And they kind of span from 30 billion in market cap all the way down to 1 billion. So there is a sweet spot there. And honestly, like I heard you guys talking before about tech, you've got these multi-trillion-dollar companies out there. What would be so shocking about a 30 or 40 billion dollar deal in the context of the broader market? It wouldn't really shock me. I think the street might be, but I think we're set up for a big year next year.